Hey guys, we're going to do a quick review of HK, which is Halcon Resources. We're going to talk about if you should have bought this stock ever, if we would have bought it and when, and why the certain downturn in the prices. And if you currently hold this stock, what could you do going forward? A This type of company, which is a energy exploration company, mainly in oil and probably natural gas, is a very, very, very dangerous company to own. A, it's a penny stock, which is under $5. B, it's an exploration. So if you look at the door right now and see um, gas stations and the gas prices are about $2 or below, which basically means that there's too much supply and not enough demand. When that is the case, companies like this who actually go look for oil cannot look for it and produce it and get it shipped back to the States at a lower price than what the market price is. So if it's at $50 per barrel, they would have to explore it, get it ready, bring it in at about $30 to even make sense for them to do it. And that's almost impossible right now, especially with the supply that we have. The average supply is probably lower than that. So when the oil comes back up, the first things to go are going to be whatever's being held right now, and then exploration can start to find new oil or new gas or whatever they're doing in order for the stocks to come back up or the stock of oil to come back up. B, we do not at the IASA fund or at IASA stocks trade penny stocks, free and clear. We do not do it, even though with this one we could have made tremendous amount of money. We're talking almost $1 million if you would have played this the right way. Um, we don't want to risk it because it can go the other way very, very quickly. But let's say we were interested and we do want to buy it. What opportunities did we see in the last 6 months? And that is exactly what this chart is showing, where we could have bought this stock. There are two opportunities, and those of you who know how to chart like we do already see them on this chart, and we follow the CCI method. The first thing we look for is going to be our CCI signals. CCI signals basically tell you uh, when there's added interest into that stock. And so the CCI is actually this green hump towards the bottom. And let me draw a little circle over here as well so you can see that. And when it passes the 100 mark, or when it turns green, basically, there's interest. And based on that alone, if we would have bought this stock, we would have bought around 50 cents and sold it at about $1.50. That's an easy $1 million for us in about 4 days. Then I can retire, basically. Um, but we look at other indicators as well. So there's a CCI right there. There's one more point in this chart where the CCI touches the 100 line. And let's draw a line over there as well, which is right over here. And the same concept, CCI touches 100, and look at the stock. It goes from, and I'll draw a little line here so we can see it. It goes from 110 to 135 all the way up to 150. So that's another 40-cent profit that you could have made right over here. Easy money. And the first one, we can draw the line going up here and sold it. Let me draw my circle of the other CCI so we can see that as well. But we also look at, like I said, other indicators, and we see the MACD, which is down here. The MACD, which is down here, is below zero. We like it to be at zero or above, but it's trending in the right direction. The black is above the orange, which is very key for us, and it's moving up like it needs to. So this is telling us that consolidation is happening, and it's going to move soon. And we see the same thing, or almost the same thing here, where it's already above the zero line. The black is trying to come up above the orange. It's consolidating. It's going straight. And that's why you saw a less of an uptrend up here on top. compared to what we saw a dollar plus profit margin at the bottom or at the first opportunity. Secondly, we also look at the stochastics. The stochastics is something that we don't really talk about often, but I've included in my charts going forward because it's a really good indicator as well. Stochastics on the first buy was below 80, which we want. Anything above 80 is dangerous and it's time to sell because a lot of people already own it and they're about to sell themselves. Uh, it's coming up to the 80 range, and right when it hits the 80 range, hangs around there, it's time to sell because the CCI signal is already telling us to sell, which basically mimics the our stochastics going below 80. On the second buy, we see the stochastics is below 80 as well, moving upwards. When it touches 80, that's when we sell, and that's basically a day or two before the CCI hits hits the 100. So stochastics gives us an like a heads up of a day, and then CCI confirms it. We get out and we still keep some profit and let it ride down and buy again when the opportunity arises. And this time it's very clear to see in both instances, and I'm going to change the color on this one so we can see it. Let's do orange. The MACD going negative. So we have the MACD here and we have the MACD here going negative, which also gives us a signal. Now it's a later signal that confirms even more downtrend, but it's a signal nonetheless, and it confirms what we already know. And you look at the stochastics; is already at the negative line, right when the CCI when the MACD barely crosses. So we have three lagging indicators. CCI tells us first. Oh, I'm sorry, stochastics. CCI tells us to buy first, stochastics to sell first, and MACD to verify the trend. I'm going to go ahead and erase all this for now. So there's only two opportunities to buy. We would have made a substantial amount of money on both opportunities. And let's say you kept the stock for a while. So let's say you bought it right when it went high. That's when you found out about it. Now I'm going to make this a bright green. So let's say you found out about it and you bought it and you held it. You could have potentially bought it and sold it and held it at the $1 mark and just wipe your hands cleaning and go home. You could have prevented a big loss if you would have seen this right when you have bought it. I'm going to erase this so we can zoom in on these sell signals here. And I'm just going to erase my annotations. Okay. And let me draw a circle. And by this time, you should already know what I'm looking at. And it's going to be in green. Look at the black line, the red line, and the green line. Now, when we were buying stocks over here, oops, move this one back. The black line went above the red line. And if you look at it here, and right now I'm on the right circle at the beginning of May, the red line is now above the black line. So this stock is telling you, hey, something's going on. I have confirmed a negative trend. Sell me now. And it gives you 1, 2, 3, 4, 5, 6, 7 days of warning to, hey, get rid of me. Something's bad's about to happen. And if you still held it, you would have experienced this major drop right over here. And that's a 75% drop. Now, there's a couple of reasons why this happened. A, on the morning of the 19th, this company declared bankruptcy. And now when that happens, all hope in this company is basically lost. The company can just stay afloat for a little bit, but if they don't get their act together very, very quickly, or they don't get purchased by another company, it's going to zero very, very quickly. It dropped 75% in one day.